Hi, I'm Yvonne Ike, Managing Director and Head of Sub-Saharan Africa, excluding South Africa, at Bank of America. In this role, I have responsibility for investment banking, global markets, and corporate banking in the Sub-Saharan Africa region. I play a number of other roles in our organization. One of the ones that I'm most excited about is being the executive sponsor for our EMEA Intergenerational Employee Network. We also drive an Africa recruitment initiative in the bank, which I play a key role in. I've been working in this sector now for more than 25 years and still continue to enjoy the challenge of galvanizing capital for development in Africa. My passion for development in Africa also admonished me to set up a foundation called Adara Foundation, which focuses on women and youth empowerment in the region. I would say that certainly the two financial institution types sit side by side. So I see more collaboration than competition, and they just serve different needs, to be honest. So if we look at and the financial payments platforms became increasingly important post-COVID. In those 2 years of COVID, digital payments in particular really accelerated. So what we see is that, if we look at fintechs that focus primarily on e-payments, domestic and cross-border, and we then also look at, and they also facilitate trade within and across Africa. I think this is a very exciting development for the fintech space. And fintechs also really focus more on the consumer, the retail, the smaller businesses, and has been quite instrumental in increasing financial inclusion in the region. Clearly, more nimble, more new technologies. So for example, there were 5,200 startups between 2020 and 2021 in Sub-Saharan Africa. And half of that were actually fintech startups in the region. So what we've seen is over time, fintechs becoming increasingly sophisticated in some of the offerings that they give. Started off mainly facilitating payments. As we know, mobile payments, Africa accounts for 70% of the mobile payments in the world today. So it's a big part of how we make payments and facilitate trades. Banks, however, they also leverage fintechs to service their customers, and also it helps them with customer acquisition. I think the focus of banks is a little bit different, or rather, not the focus, I would say more the area where banks add more value is a little bit different. More sophisticated lending, better servicing the corporate world and the public sector, public and private sectors, to be honest, and then also financing very large transactions. So both are needed. There's a lot more technological advancement happening in the fintech space, and both of them are working to serve economic development in Africa. The fintech sector is providing many more customers significant value than in terms of the range of transactions that can be done on the fintech platforms, and the cost of doing those transactions. And also because the infrastructure costs for fintech companies, certainly the physical infrastructure costs for fintech companies are much less than typical banks have, they're able to pass on the benefits of higher savings to the customers. This, I do think, is very good for the consumer in the sector. And I think what it does do for the traditional banking sector is, frankly, cause them to evolve more quickly. So certainly a good thing for the consumer. mentioned earlier, just the sheer rate of introduction of fintech companies in sub-Saharan Africa has been very significant. So if in 2020 to 2021, there was over 5,200 tech companies, of which 2,600 were fintechs. That's a lot of companies providing slightly nuanced differences in the services that they provide. So of course, the regulators are doing, I believe, a good job, but then they're still behind the rate of innovation at the moment. And where it matters, they are catching up. So if you think of one of the most important advancements that happened recently is where the Central Bank of Nigeria actually has now given licenses, mobile payment licenses to telecoms companies, so that they can now start making payments, facilitating payments and trade for their customers. And this has made a big advancement, and the technology and the regulation around that very impressive. Of course, regulation must continue, as it always has been, to protect the customers, which by definition involves preserving the stability of the financial sector. But just by focusing on those, I do think that all other things, including supporting the financial, or rather enabling financial inclusion, and in extending the role that the financial sector plays in economic development, will be natural consequences of the regulators continuing to focus on customer protection and the preservation of the stability of the financial system in Africa. I think we're in very, very exciting times. So there's, there's a new word that is apparently the most trending word in 2022, and it's called perma-crisis. And this is where we're seeing that there's we're almost in a permanent state of crisis globally. But interestingly enough, this is the first time that I'm aware where the interests of the developed world and developing markets like Africa are now aligned on a number of very important topics. The opportunities and challenges of demographics, the rate and speed of innovation, and the role that the financial sector is playing in making lives easier and transforming the way that we live and operate. And of course, energy transition. So now everyone has an energy crisis. In Africa, we've always had an energy crisis to the extent that half the population, almost 800 million people, are in darkness. And now the whole world has an energy crisis. And then lastly, the climate and ESG are all challenges that we all share together. What's very interesting about all of this is that the innovation from Africa, particularly in technology and increasingly in the fintech space, I believe will change the way that the world evolves in solving many of these issues. And a lot of that innovation will come and is coming from Africa.